With the recent sell-off in the stock market, NIO has gone down to almost $20 a share. In this video, let's explore what is going on with this company as it is touching new lows these days, possible reasons behind it, do I see a rebound in the stock, and at the end, my perspective if this is the right time to buy, sell, or wait. Hi, my name is Sunny and I make content that affect a common man financially. So let's dive into today's topic. NIO Buy at $20. If you're new to this channel, please subscribe to it alongside smashing that like button as that will help me with the YouTube algorithm, which will be highly appreciated. This Chinese EV maker has seen a consistent slide in its stock price, which according to some experts is Chinese version of Tesla. Analysts have been very bullish on the stock since they see huge future potential for the company going forward, but if you see its stock price, it is going down every day. It has touched a 52-week low of under $20 a share, which is like 60% down in a year, or in the last 5 years lost almost 20% of its value. This huge value destruction of shareholder wealth came as a surprise to many, so naturally that might have shaken the faith of some of the investors. There are many possible reasons behind this pessimism in the stock market these days, but the main one is the Fed tightening the money supply and the possible increase in interest rates. In simple terms, the time of cheap money is coming to an end, therefore, investors are shifting away from stocks into more secure bonds. Thus, you can see money moving out of growth stocks too. Frankly, I don't believe this is the sole reason since there are other contributing factors which add to the pessimism in the stock market and the growth stocks in general. Therefore, let's explore them too. Because of the impact of pandemic on supply chain, there is a shortage of chips and critical components used in the manufacture of their cars, which is impacting their production and hence affecting their revenues. It seems that Tesla is not affected by this as they are able to ramp up their production. That is why it can command better valuations in the stock market as compared to NIO. Right now, they have been selling their cars mainly within China, but recently they have been trying to expand into Europe, which I think will take some time to ramp up given the supply chain bottlenecks. Last but not the least, geopolitical tensions between Ukraine and Russia is not helping the stock market at all because the only thing investors don't like is uncertainty. In spite of macroeconomic factors like Fed reducing the money supply or possible increase in interest rates shortly, supply chain issues or even geopolitics right now in Europe, I see the stock in a very different light, which might be right or wrong depending upon how you look at things. First, let's talk about companies' fundamentals, which we all know have improved substantially from where it was few years ago as it was on the brink of bankruptcy. The growth companies need to invest heavily during their initial phase as they have to validate their technology. During this time, they put in a lot of resources in research and development and then ramp up production, which unfortunately takes a lot of time and money, but at the end, there's no certainty. At least that phase is over as far as NIO is concerned. The rest are all external contributing factors that can affect the company, maybe in the short term, some of them may be in medium term too. Now, if you look at the stock at $20 a share, you would agree with me that all the uncertainty about providing the technology and production capability to make them are taken care of. You can see a clear path for them to improve, which they have already achieved or built. I agree there are some other external factors that do contribute to the stock where it is now, but according to me, that can be a bearing for a short period of time. But for a long-term patient investor like me, these prices looks like a discount sale. Normally, I'm not a fan of investing in Chinese-based companies, but NIO has been an exception for me. Therefore, I would consider buying around these levels, but definitely not go all in while keeping an eye over the short-term factors alongside companies' fundamentals. But that is me. I might be wrong. Do your own due diligence before investing based on your risk tolerance. As a disclaimer, I'm not a financial advisor. Please consult one before investing based on your personal financial situation. If you like the content that I make, please help me and my channel by liking, sharing, and subscribing to it. Thanks for watching and see you in the next one.